everyone. So today we are going to talk to Anton Tagliaferro, one of the most famous fund managers in Australia. We are going to talk about the economy and especially how the re-election of Trump in America going to affect Australia markets and Australia economy. Hi Anton, thank you very much for this interview. So the first question, what do you think about the biggest thing when Trump was re-elected? The first thing he said about the tariffs on the export, especially with China. So what do you think about it? Today actually I saw the article that it is going to benefit India apparently, because obviously if America is not buying from China, they will start buying from India. So what do you think about that? And what do you think about Australia, where Australia sits in that position? Because we know that our relationship with China and how we're going to manage it between China and America, where are we? Yes.
Thanks for talking to me. The questions you've asked could take hours to answer, to be honest. So look, nobody really knows a lot of those answers. What I can say is obviously Trump has said many things and promised many things, and what will be delivered is another thing. But I think the main issue for Trump and America is they have a growing federal deficit. It's hit 36 trillion last night. If you think about that, if interest rates say are at 4%, that means they have to pay, over 1.2 trillion a year just in interest, just to pay the interest on the deficit, which is growing. So that's obviously a huge problem. And the other problem they have is that they have this huge trade deficit with China. In other words, China exports to the US $500 billion more goods than what goes from the US to China. And if you go into a Walmart in America, it's basically a made in China shop. And obviously that's taken a lot of the manufacturing jobs from America. A lot of things like furniture, cups of coffee, whatever. Everything used to have local manufacturing. But since China joined the World Trade Organization in 2001, they've grown to export many of these things to the rest of the world. So obviously there's a lot of anger in the US about the loss of jobs, the direction overall of the Democrats, etc., with all their woke and green principles, which is, sent electricity prices through the roof, as they have here in Australia, by the way. So there's a lot of anger. And I think what people forget about with the US, which is quite different to, say, Australia. The US is actually quite a relatively poor country in terms of the average person. So most people don't understand that in America, after 6 months, your unemployment benefit stops, and you get no subsidies from the government, and then you have to rely on food stamps to food. So in the US at the moment, there are over 42 million people who rely on food stamps. Okay, so there's 42 million people who are there. Those are people who don't have any money at all. Obviously above them there's a whole tens of millions of people who are just breaking even, if you like, right? So it's a very different, so there's a lot of anger in the US about, the loss of jobs, the growing trade federal deficit, which is basically because the government is spending too much money, etc. So Trump is trying to, part of his election promises was that he wants to bring all that, bring it under control. So what that means is obviously with China, right? He wants to, so China joined the WTO over 20 years ago. Now, when you join the World Trade Organization, it's supposed to be an organization where countries trade fairly with each other. So the truth is though that China is not fairly trading with everybody else, because its labor is heavily subsidized. There are no unions in China, so people get paid $5 a day. Factories are open 24 hours a day. There are no unions, there are no strikes, right? Yeah. And that's what manufacturing companies around the world have been trying to compete with, which we obviously haven't been able to. No. Hence why Chinese exports have taken over, why China has. Now, how does that impact Australia? That's a very good question. So Australia is one of the few countries in the world that has a trade surplus with China. We export more to China than we import. And that's because of obviously the resources. So basically a lot of what China manufacturers is made using a lot of Australian resources. So just to give you people an example of how Australia has benefited from the growth of China, if we go back to 2002, 2003, Australia used to export 150 million tonnes of iron ore to China every year. So 20 odd years ago, 150 million tonnes of iron ore. That's obviously used to make things like steel, etc., for fridges, for cars, for whatever. Right? Steel is a very important component. In those days, by the way, we were getting $20 a tonne. As of today, Australia exports 1.3 billion tonnes of iron ore to China, and we're getting $100 a tonne.
Yeah.
So I think people often don't appreciate how that growth of China's trade surplus with the US and the rest of the world, plus its own growth of infrastructure, right, has helped Australia so greatly. So one of the reasons Australia has prospered in the last 20 years is because of that growth in our, it's a dirty word, our mining sector. I find it very strange in Australia that so many people are anti-mining, when really the whole economy, the growth, because we don't manufacture anything else. We don't manufacture much in Australia, let's be honest. Most of our wealth, and our exports come from things like iron ore, coal, LNG, etc., right? So that's a bit strange, I find, in Australia, because if you went to Dubai and you saw the city of Dubai, you'd go, wow, that's fantastic. If somebody in Dubai said, let's stop producing oil, that person was sent to prison, I think, straight away. In Australia, all the wealth you see in Sydney, we don't actually manufacture much, but a lot of that comes from our mining industry. And yet, the mining industry is given such a hard time by the politicians, etc. But then that's another matter. So how will Australia be impacted? That's a good question. So as I said, China has this big trade surplus with US, with Europe as well, and it imports a lot of those raw materials from Australia. So that's the biggest potential impact, that if there's a reduction in trade between China and the US, that may impact our resource sector, which is by far our biggest earner and the biggest exporter from Australia.
Okay, thank you very much. So what does it mean for mums and dads investors?
Very good question.
For little superannuation funds and SMSFs?
Yes, look, as I said, I mean, the thing about investments, and I've been doing this for 40 years, is there's often times when things are confusing, when it's hard to know what to do. And the thing I've learned, is the best thing to do with a portfolio. Obviously, it depends on what your need of income is and capital growth, right? That's up to a financial planner to put that plan together. But the best protection from anything is to stay invested in quality assets. And the three main asset classes are basically shares, property and cash. So always hold good quality of those types of assets and have a spread of them, right? Depending on your risk appetite and income. That's the thing. So what does it mean for Australian investors? Well, again, the picture is not clear. I mean, you've had, I might go back a step, okay? So if you look at what's happened to the stock market, not just in Australia, but around the world, there's been this movement towards index funds. I don't know if you know what index funds. So this is where you put your money in a fund and it just buys everything in the index, right? And there's also these quant funds who basically they buy things on short-term momentum. Mm-hmm. So there's been a huge shift in the last 10 to 20 years away from people like me. For example, people used to give money to people like me and say, go and buy me a portfolio of stocks that you think are good value. Now, when I look at a stock, I look at the valuation. I like to think of where it's going to be in 1, 2, 3 or 4 years' time. Yes. The movement to index and quant funds has changed, and about 70 or 80% of trading on the stock market today is done by index and quant funds. Okay, so what an index fund does is when it receives $10 of money, it puts $10 in the index. Mm-hmm. Now the index, for example, at the moment, CBA, Commonwealth Bank, is over 10% of the index. So every dollar that goes into the stock market from these index funds, 10 cents goes into CDO. Not because it's good value, not because they like the prospects, but because it's 10% of the index. Okay. There's also things, as I said, like quant funds, and they tend to trade on either short-term momentum or short-term earnings. So, for example, at the moment, the banks in the US are doing very well because Trump has promised less regulation of the financial industry. And that's led to things like JP Morgan, etc., having these big jumps. They're quite cheap, the banks in the US. And obviously, lowering the regulation means they can start lending more freely. Let's hope we don't go to the crisis we had in 2007, because obviously they tightened a lot in the US since then to stop the banks from that nonsense of lending people with no income and no jobs. But Trump is talking about loosening the regulations again. So you've had the financials, the banks in the US go on this big run, and that's having the impact of driving Australian banks up, which has really got nothing to do with what's happening in the US. But as I said, because of index and quant funds, they tend to replicate what's happening there here, even though it doesn't really apply here. So to me, for example, Commonwealth Bank at $160 a share is a complete nonsense. It's the most expensive bank in the world. It's trading at 3.5 times book, which that doesn't mean much to most people, but you have to. Most banks around the world trade at 1 to 1.5 times book value, which is basically the amount of equity the bank has, right? So most banks trade at 1 to 1.5 times book. CBA is trading at 3.5 times book. It's one of the most expensive. Well, it is the most expensive banks in the world. It's now by market value in the top 10 banks in the world. It's larger than HSBC, which has got banking operations around the world. So you're seeing a bit of, I think, nonsense valuation. So look, it's time for caution, but it's always time for caution. Look, the best thing is to have a spread of assets. I'd be a bit wary of index funds at the moment because obviously there's these huge weightings to certain sectors. And the overall stock market, the Australian stock market really is, about 25-30% resources and 25-30% banks. So that's 50 to 60% in the resources and the banks, which, the resource sector, there's a bit of a question mark because nobody's quite sure yet whether China will be impacted by the amount of resources, and the financials, the banks, as I said, at the moment they're being dragged up because US financials are going up. So I'd be a little bit cautious of the overall index. Having said that, I think there's some good value opportunities, for people who've got a longer term view.
Oh, thank you. That's a very comprehensive answer. What about the bonds? What do you think about bonds?
Again, very difficult question. And it's difficult because if you look at Trump's policies, he says he wants to bring down inflation, right?
Yes.
But he also wants to put tariffs on. Well, if you put tariffs, if you make all your imports 20% more expensive, it's not going to help inflation. Mm-hmm. So it's hard to see how you can bring inflation down quickly if you're going to put these tariffs on all your imported goods, particularly a country like America and Australia, which relies on imports for most of its. If you go to any shop, you'll see it's made in China, maybe.
Yes.
So that's the thing. So with interest rates, it's difficult. So what Trump is saying, and there's not a straightforward answer. So what he's saying is he wants to put these tariffs, particularly on China, right? And that's partly a political tool too, because the US wants to remain dominant in the world, and they can see China as a superpower about to overtake them in the next 10 to 20 years, funded by their own trading with China, So that's obviously something that's clear, I think, in Trump's mind. So he wants to slow China's growth, which a lot of it has come at the expense of America, So he wants to put tariffs on China, A, to slow China down, B, as I said, to bring manufacturing back to the US, But as I said, tariffs are inflationary. On the other hand, he's also talking about drill, baby, drill, that he's going to drill, lots of oil and lots more gas, which will bring down the price of electricity in the US, which is one way of trying to bring inflation down. So it's not clear yet whether the policy of putting tariffs on China, bringing the price of electricity down by drill, baby, drill, you know, exactly what the impact on inflation will be, and hence what the impact on bonds will be, right? So initially, you know, bond yields went up quite heavily when Trump came in because they thought, oh well, tariffs and he's going to stimulate the economy. More recently, interest rates have come down a little bit because he's just appointed a new Treasury Secretary, who's an ex Soros hedge fund guy, right? He runs his own hedge fund, who apparently is a bit more realistic about how you achieve, you know, higher tariffs and lower inflation. Because, as I said, it's quite a tricky thing to do. Because the higher you put tariffs, the higher the price of goods, the higher inflation. So it's not that easy to bring inflation down if you put in the price of goods up.
Oh, thank you. What about gold and precious metals?
You're asking all the easy questions, Natalia. Look, it's difficult to forecast accurately, to be honest. I mean, the price of gold has gone up, as has Bitcoin, you know, partly because of these huge deficits as well. You know, these. If you look around the world, you know, the US, as I said, has got this massive federal deficit where they're basically borrowing more money, printing more money to keep their economy going. You know, Australia is doing the same. You know, and what that leads to do is this obviously leads to more inflation, but it also leads to the notion, you know, for many people thinking, well, what's paper currency actually worth? You can keep printing it like you are, which they have been, you know, which many governments around the world, in the US, Australia as well, you know, keep printing money, borrowing money, right? What's the value of a dollar really worth? And this is where people have looked for alternative stores of value, which is why gold has gone up so much, and partly why people are flocking into Bitcoin, right? That's the theory. Now, look, I can't predict it, to be honest. I can understand the logic as to why they've gone up, you know. Is it sustainable? Have they got a lot further to go? I couldn't tell you. But the logic behind why things like gold and Bitcoin have gone up is because people are questioning the value of you know, printed money.
Oh, yeah.
You know, the general economic principle is the more you print of something, the more you supply it, the more the price should go down.
What do you think about this rumor that Trump is going to buy Bitcoin? I mean, government is going to buy Bitcoin and pay the debt, American debt, with a Bitcoin.
I mean, again, I don't really understand how that would work. Bitcoin is supposed to be this rare thing with you know, value because there's only so many of them going to be mined. Whereas the US dollar, they can print as much as they like, as they have been, so I'm not really sure how that works. So look, as I said, Trump is very good at saying lots of things. But I think, to give Trump credit, he understands, you know, some of these major issues. He understands that many Americans are doing it extremely tough. He also understands, I think, you know, and we're seeing it here in Australia, that all this printing of money has devalued the value of our currency, really. I mean, look at the value of property.
Yeah.
You know, that's only going up because of all the printing of money, which is effectively, you know, property is going up, one could argue, because the value of our paper currency is going down, right? So I think Trump sees a lot of these things very clearly. I think the Democrats had absolutely no idea about them and absolutely no idea about what to do with them because they were so caught up in their ideology of, you know, green energy and whatever.
Yeah.
Whereas Trump, I think, understands, you know, what's really troubling many, you know, average Americans, which is really the cost of living, inflation, the loss of manufacturing jobs, you know, and I think he's trying to find a balance, and also the huge government debt and the waste of money, which is fueling this jump in asset prices, you know, house prices. So I think he understands that fully, and he's trying to, I think, put his mind around, you know, how can he bring those things under control? So you know, there's no quick fix for all. These are, you know, serious issues. They're issues that have been ongoing for many years, and I think he's trying to get his head around it. He's trying to appoint people like Scott Bessent, the new Treasury Secretary of the US, who's an ex-hedge fund guy, very clever guy. So he's surrounding himself, Musk, you know, who's there for the government efficiency program to try and cut the deficit, right, the US deficit. So I think Trump understands the issues. The question is, how does he deal with them, you know?
Because it seems that he's going to go backwards in terms of like anti-globalization, anti-green energy. Do you think it is going to work for people who already like, because we were going to the globalization and the green energy, and now he's going just to cut everything off and go back to like 20 years ago?
Well, I think, you know, you have to think about where we've come from and the situation, you know, and I can understand many of the things he's saying and where he comes from, which have some sympathy, right? So when you look at the globalization, as I said, you know, China has managed to dominate many of these industries in the world because it subsidizes its labor, because it has an artificial currency which is pegged artificially low against the US dollar. Yeah. So China has managed to dominate the world, I don't want to say by cheating, but they haven't played, you know, fair with fair. So, you know, you look at a country like Australia where we have, or America, unionized labor, people can go on holiday, we give them maternity leave, paternity leave, all sorts of lovely things, which we all expect. In China, you don't get many of those things, right? In China, you get the $5 a day in many factories. You work 8 to 10 hours a day, and those factories never close because they have 2 or 3 shifts a day, right?
Child labour as well.
Well, whatever. I'm not sure about child labour. I've been to China. They look like children, but apparently they're all over 18. But it's difficult to tell sometimes. But so you know, so there's that issue, right? So when you say anti-globalization, and now look, the Western world has benefited greatly from China's subsidies because we buy very cheap things. I mean, I don't think the cost of a shirt has gone up in 10 or 20 years, you know, really, right? The cost of many things haven't gone up. So we've benefited from a lot of these cheaper goods from China. But on the other hand, you know, it's come at a cost. It's come at a cost to real jobs, real manufacturing jobs, right, in many countries. I mean, Australia, we used to have a clothing industry, a shoe industry. We used to produce our own dunnies, our own toilets, you know, Caroma, that's all done in China, we import, and same with the US, right? So when you say anti-globalization, the pendulum has probably gone too far, and it's probably now up to China to either bring its, you know, play the game a bit more fairly, although that might be inflationary, right? So that's the danger there. Whatever. When we talk about green energy, and you're probably talking to the wrong person here, but I mean, I'm concerned about climate change like everyone else. I mean, it's you know, it appears to be happening, I guess. I don't know how quickly, but it's happening. But, you know, this sort of thing about we have to do it by tomorrow or by 2030 is just nonsense. I mean, you can't turn, you know, a country that's been powered by coal and gas powered stations onto solar or wind in a few years. It's just ridiculous, really, because you know, you still need a base load of energy. You know, a base load where if there's no wind or no sun, you still have to have the lights on and the air conditioning. So I think it's got to be, it has to slow. You know, I think the targets set are quite unrealistic. So I think it will happen, it'll just take longer. You know, and the truth is, you know, a country like the US, which is grappling with high inflation, high cost of living, you know, people, as I said, who are on the bread line, the 42 million on food stamps, the other 50 to 100 million on the minimum wage, they're not really worried about the climate change at the moment. They're more worried about putting, you know, a roof over the heads of their family and having something, you know, a good meal to eat every day. So that's the reality of the US. And that's it. And as I said, I think Trump understands that. I think that's why he's won the election. And hence he will slow down some of these things, which, while very nice in theory and in concept in terms of let's all live on green energy and let's do it all tomorrow, the truth is that comes at an expense today in terms of repaying, you know, record prices for electricity. It's damaging our manufacturing sector because you can't compete, you know, that's another reason we can't compete with China. I mean, you look at a country like Australia, you know, which I find quite ridiculous. You know, we have all the coal in the world, we have all the gas in the world, we have all the uranium in the world. We export it to all of Asia, yet we can't use it, many of that resource for our own electricity, because we have, you know, the reality is in Australia the Senate is controlled by the Greens. You know, the Greens have the majority, the balance of power. So every government in Canberra has to go via the Greens to get any law, whatever. And the Greens have a major say. But to me, it's ridiculous how a country like Australia, where we're powering much of China, Japan and Korea, I mean, if you look at Japan and Korea, they have no gas, no coal, no uranium. They import it all. And they import a lot of it from Australia. And they import it and they use it to build their cars, their factories, right? And here we are in Australia, and we can't use our own coal to keep our electricity prices at a reasonable level. So, look, a lot of those things to me don't make a lot of logical sense. They're political decisions. But I think the thing about Trump is he sees right through those political decisions, you know, of the past. He understands what is impacting the, 80 million people or whatever who voted for him, and that's what he's going to address. So he's less concerned about climate change as is tomorrow. I'm sure they'll still do it over time. Might take till 2040, instead of 2030. But he's more about addressing some of those things which are really impacting on people's lives today.
Yeah, and he stands up for what he believes in. So.
Well, look, again, what does he believe in? Trump is a guy who, wanted to get elected. That's his number one thing. And I think he sincerely believes in some of these things. And as I said, some of them are, they make sense. Some of these things, people who are struggling to, afford a house, grappling with inflation, whatever, they don't want to be told you have to buy an electric car, which is more expensive. You can't use your old banged up Chevrolet, because you'll be fine. They're not really. They have higher priorities as of today.
Yeah, I understand. Yeah. What about the interest rates?
Well, we talked about bonds, right? I think that the issue, obviously we've seen rates coming down in the US. Well, obviously we had COVID where rates were cut to zero, they were cut to zero because governments decided to shut the world because of the virus. Obviously that was disastrous, for the world economy. So what the governments did, and central banks cut rates to zero. Governments came out with all these handouts, right, which they gave to every unemployed person or closed business. And of course, what we saw then as the world opened up is we saw this big spike in inflation, right? Because suddenly, people are back to work, they've got all this money, they're all spending, they're all traveling, buying stuff, whatever. So, and because of that, we saw interest rates go up quite rapidly. We saw them go up more rapidly in places like the US and New Zealand. Much more than, say, in Australia. In Australia, we didn't go up as much. What's happening in places like the US and New Zealand, rates are coming down now. They're still higher than they are in Australia. So in Australia, we sort of adopted a more gently approach. And hence, as a result, we're not getting any interest rate cuts yet, as opposed to the US, which went to over 5% and is now coming down towards 4%. We've stayed at around 4%, right? So short rates are coming down because inflation seems to be coming down, Given the mixed outlook for inflation, it looks like there might be a pause now in terms of those rate cuts until the central banks see, where inflation and many of these issues, how they'll be resolved. So, look, interest rates could come down in Australia. I'm not sure yet. I mean, we haven't. The other thing in Australia, we have an election. Probably in March, I assume it will probably happen by March, so we may have a change of government, we may have a hung government, But the issue with inflation, if you take Australia, it's very difficult to bring inflation down when you have, governments who are still spending. I mean, there was a report the other day on Victoria, which, the debt in Victoria has gone from 30 billion only a few years ago. And the government debt is forecast to go to 280 billion. So Victoria alone has spent over 200 billion in the last few years. So it's very difficult to slow an economy down, by putting interest rates up when you have government spending, so lavishly, and that's the issue in Australia, that we have this. The government wants to bring interest rates down, especially before the election, and the Reserve Bank is saying, well, you stop spending and we'll cut rates perhaps. But if you keep spending, we can't cut rates because all that spending fuels the economy, right? So, and it's the same in the US with that huge federal deficit that they have in the US, and hence why he's brought Elon Musk in and set up this efficiency department, which works outside the government, where they're going to be looking for $2 trillion in savings from the government deficit. Because, as I said, obviously, if the government spends less, that you've got a better chance of bringing inflation down sustainably than if the government keeps spending. You know what I mean? Because you can't have interest rates, you can't have government spending like there's no tomorrow, and then expecting the central bank to cut interest rates to bring inflation down. It's one is counteracting the other.
All right. So what you're saying that you're not expecting any disaster from Trump being re-elected. You're not expecting any like economy collapse, in global economy collapse or anything like that, right?
Well, again, I can't predict the future, and then those are very extreme statements that you've said there. No, I don't expect an economic crisis, any day soon. But on the other hand, there are several, major issues which have to be dealt with. As I said, the large trade deficits that America has with places like China, the huge government deficits, which have to be addressed through cutting spending. The inflation issue, which has to be dealt with by cutting things like the price of energy, perhaps, right? So those are major issues, which Trump is trying to grapple with. Can he do it all that quickly in the space of? I mean, he's not even president yet, right? So, but I think the fact that he's got, obviously, the Republicans have got now a majority in the lower house, in the Senate, and he's obviously president. That should help put the Republicans in a better position to implement these things. But again, that's not straightforward because not every Republican in the Senate is going to vote, for any policy that Trump puts on the table. Even the Republican Party amongst themselves, there's some who are, more right-leaning and some are left-leaning, etc. So again, that will hold the balance. But there is a better chance of some of these things being implemented. But again, you do have, as I said, you have this safety wall, if you like, that the Republicans aren't just going to pass as law anything that Trump recommends, right? There will be sort of lots of debate and give and take. So, as I said, the major thing Trump needs to address is the huge trade deficit with China, the huge government deficit, and the cost of living problem and inflation for most, working Americans who are, as I said, not that well off, basically.
Okay, thank you. And basically you are saying that we go back to the basics, invest in good companies, diversify, and I guess stay calm.
Natalia, I've lived through, in my 40 years of investing, I've lived through all sorts of, scenarios. I think the first crisis I remember is the sort of 1987 crash, probably, before most people I speak to today were born or can remember. And I'll never forget on the 87 crash, and you probably, were you born or a kid or what were you doing?
I wasn't here, that's for sure.
You weren't here, right. So on the 87 crash, the stock market was booming along. And then on the 20th of October 1987, we woke up one day and the Dow Jones was down 20-25% in one day. And the same thing happened here in Australia. We got up one day, I'll never forget going to work as a prudential assurance in those days. And we put this whiteboard of how much the market would be down. And the index was around 2,300 in those days, and I think the worst forecast was it would be down 200 points that day. The market was down 500 points. It fell 25% almost in the day, right? So now I remember when that happened, the whole media, everyone said, "Oh my God, there's going to be a Great Depression," because the last time markets had fallen like that was 1929. So the media was around the Great Depression. I was a fairly young guy in those days, 20-something, and I remember going home at night thinking, wow, I wonder what the world will look like in a Great Depression, right? And, we never got a Great Depression, right? In fact, we got the opposite. Governments cut interest rates too far, we got an inflation spike, and then we had the recession in 1990. So, look, I've lived through all sorts of things, the GFC, the tech boom, COVID, whatever. There's always these predictions of doom and gloom and woom, and the truth is nobody really knows. And the truth is it's normally somewhere in the middle, So I try not to make too many forecasts these days, and I try not to listen to too many forecasts, because as I said, the truth sometimes lies in the middle. So look, all I can say is that stock markets are already at record highs. There's already a great expectation for things to be good and get better. And that makes me a bit cautious, because there is quite a bit of good news already factored in. The Nasdaq, the Dow, the S&P 500, the ASX 300 are all at record highs. Some of the valuations, when you look at them, as I said, CBA being the most expensive bank in the world on 3.5 times book, on a yield of 3%, just looks. I'm not sure which way you have to look at it to try and make sense of it, but I can't. So there's extreme. There is a bit of folly in markets, built in, but look, somewhere in the middle will probably be the thing. But again, as I said, in terms of equity markets, they're already at record highs. They've already had a good rise, so I wouldn't expect that to be repeated, too quickly going forward.
Okay, understand. So thank you so much for your time, Anton, and it was great speaking with you. And let's hope that through this turbulence we all make money.
Yes, so again, look, it's as I said, everyone's just got to be cautious. I think in the stock market, there's some good opportunities in Australia. Some of the small and medium caps. As I said, there's a lot of the money flowing into the stuff with momentum and the banks or whatever. But actually, it means a lot of other stuff is being left behind. And when you look at the outlook for some of those companies. I won't mention specific companies because it's probably not the forum. I'd love to, but I won't. But where you look at the outlook, you look at their sustainable cash flow, you look at their dividend yields, they actually look quite attractive. They're not priced for huge upside. So there are opportunities, but I think one's got to be, fairly selective.